Good morning. This is Dylan Jovine from Behind the Markets. Happy Monday. U.S. Steel. We haven't talked about this one in a while. We recommended shares last year at about 31 bucks a share and sold the stock at about 48 after they announced that they were going to get acquired by Nippon Steel, a Japanese company. But this week, the Biden administration said they're going to block that deal from happening, and shares of U.S. Steel crashed like 20% the day that happened. But the stock is back in play. And we're taking a real close look at U.S. Steel here because when we first recommended it, there were word and rumors around that they had gotten two bids from American steel companies. Cleveland-Cliffs was one of them. There was even recommends that ArcelorMittal was going to make an acquisition, a bid for the company too. But basically, they accepted Nippon's $55 bid, which sent the stock up a real nice 58% from where we recommended it. But I always believed the timing was really bad for this deal, which is why we recommended selling it. Because basically this deal, this takeover was announced right before an election year. And you just get the sense during this election year in particular that there was going to be a lot of back and forth on whether we would allow a Japanese company to buy an American icon, a U.S. Steel, basically an iconic American company. So here we find ourselves, and either candidate could have announced that they don't support this deal. So here we are in a situation here where the 2 or 3 American bidders that emerged before this deal fell apart are probably going to come back into the race. And I give the nod to Cleveland-Cliffs, although I imagine they would have to raise their bid dramatically before any deal could get done. So U.S. Steel is at about 29 bucks a share. I'm really looking in actually now to where we could see a deal happening and whether it makes sense to take another position here at U.S. Steel. This is actually now under the original recommended price that we recommended it at, 31 bucks a share, 29 bucks a share. It looks even better than that before we had any of these takeovers out there. So I can imagine a Cleveland-Cliffs or another firm coming back in here. I guess the bigger question is, what's really driving this real demand for U.S. Steel, this old line American company? Think Andrew Carnegie, think the railroads, the railway tracks, the building of America, the steel that put up all the buildings in New York. I mean, this is U.S. Steel. This is an iconic American company. What's driving it? Well, in 4 words, it's been the Inflation Reduction Act. And this poorly named, we all know, it's kind of a ridiculous name. But basically, if you look at where that money is going, it's promoting domestic manufacturing and clean energy. And the CEO of U.S. Steel, David Burritt, said himself, I'm quoting here, the Inflation Reduction Act should be called the Manufacturing Renaissance Act because it is the most incredible thing we've seen in the U.S. for a very long time. I couldn't be more bullish on the steel industry, and I couldn't be more bullish on U.S. Steel. Biden and Trump, both of them, have been trying to give goodies to blue-collar workers in America, U.S. Steel being among them. Both administrations have written bills to really favor domestic manufacturing and reshoring in the wake of the threat posed by China. And U.S. Steel is a massive beneficiary of that, which is why so many other companies have wanted to buy this asset. The headline for us here today is, as we enter this week, I am thinking about re-entering a position in U.S. Steel. I'm not sure if I'm going to do that, but if I do, members, of course, of Takeover targets will know this because that is the service that we would recommend a takeover candidate like U.S. Steel. Anyway, have a wonderful week.